Okay, good morning to all. I hope everybody is getting connected progressively as well. I was waiting a few seconds, but I think by now we can start. So welcome virtually, at least
जी सर
to this
ये अभी मैं नहा लिया है इसको
Club du CP seminar. Which is devoted to India today and to India after or during even and after the pandemic, and to its new global engagement, as we entitled the session. We were just discussing a moment ago all the reasons, the important reasons to be very interested about the Indian economy, its the Indian politics as well, and Indian relation with the rest of the world. To put it in a nutshell, the background, the Indian background was marked before the pandemic by the re-election of Modi in May 2019 by an economic performance which of course was strong by EU standards, but relatively disappointing in particular since 2017, raising a number of questions in terms of the economic prospects. A background as well marked by strong political tensions, and in particular a climate of widespread religious tensions and sometimes violence. Tensions as well with India's neighborhood, concerns about vulnerability to Chinese pressure, and also a kind of unbalancing of power with a Chinese neighbor, which is growing richer and more assertive increasingly. And in addition, I think the central strategic role played by India on the world scene is increasingly clear. So that was the background when India was struck, as everybody else actually, by the epidemic. Even though, as often with India, in that case, it took epic proportion. When in particular India applied a strict lockdown from April. It had massive economic impacts, of course, with very strong disparities. At this point, I think we can say that the recovery, the speed of recovery has surprised some observers, at least for large firms, with a number of questions remaining. And there are also available indicators suggesting that the control of the epidemic, of the pandemic, has been improving, but it still remains a strong challenge, as is the prospect of a really giant vaccination campaign, as well as very high expectation, in particular in the developing worlds, with respect to the capacity of India to provide affordable vaccines to a very large scale. So it's really a plate full of very substantive questions that we will be tackling today about the economic impact of the health crisis, the room of maneuver for policymakers, the consequences for the development and modernization of the Indian economy, and the consequences as well for foreign relations of India. So I'm very happy that we have two eminent specialists and long-time specialists of India to shed light on this issue. We'll begin with Suman Bery. Suman has held many positions. He's a very distinguished Indian economist. He's been, in particular, from 2012 to 2016, chief economist of Shell's Group, a global chief economist. He's previously served as Director General of the National Council of Applied Economic Research in India. He's been a member of the Prime Minister Economic Advisory Council, a member of the Reserve Bank of India's Technical Advisory Committee on Monetary Policy. He's worked as the World Bank as well, and many other positions that I don't have time to recall. And he's now also an external fellow with Bruegel. well presently. So thanks a lot, Suman. It's a pleasure to welcome you and to be hearing you today. And I want to thank warmly as well Christophe Jaffrelot. Christophe Jaffrelot is presently CERI and CNRS Senior Research Fellow, Directeur de Recherche. He teaches at Sciences Po. He's also professor of Indian politics and sociology at the King India Institute. And he served previously as a director of CERI between 2000 and 2008. And Christophe, you just published a book in October, if I'm not wrong, entitled India's First Dictatorship: The Emergency, 1975-1977. Well, both of you are really renowned specialists of India, and really happy to be welcoming you and looking forward to be hearing your analysis. We've planned to have Suman speak first and Christophe follow up. And then open Q&As. And we're really looking forward to interaction with all of you. So please feel free to ask your question. And for that matter, please use the chat. You can do it during the speeches. I will try to echo them to feed the discussion afterwards. So please really feel free to do that. I think it's important if we want to have a good discussion afterwards. I've already talked too much. Christophe and Suman, thanks a lot. And Suman, the floor is yours.
Thank you, Sébastien, and it is a pleasure to be here. Let me now share my screen and hope that works. Does this work?
Yeah, it does. It does.
Yes.
Thanks a lot.
Okay, but now the question is, do I know how to move the slides? Okay, so as you've already said, this is about a new global engagement. Hello. Sorry, I don't know how to make the screen go, the slides go forward. So I may have to disconnect for a bit and go back to the presentation. And sorry, we managed to. Yes, okay. Somehow it works now. I don't know why. Yeah.
Good.
Okay. So it's in 5 sections, and as Sébastien has said, this is half an hour.
Suman, sorry, I'm sorry, we can't see your screen now, so perhaps you could share it again. No, I can't, at least, and I don't think the others can.
Oh dear.
Oh, we can take a few seconds to fix that.
Yes.
It's the tricky part.
Can you now?
Yes, yes.
Okay, I mean, this is not very elegant, but if I can, I'm more sure about being able to, yeah, okay. Yeah. So it's in 5 sections, but the bulk of it is going to be on outlook, political and economic, and India's global engagement. Sébastien has already talked about the motivation. Why this isn't working? And I'm honored to, I appreciate the opportunity to be here. It is not my first time at CEPII. I don't know if Monsieur Dr. Jean-Joseph Wallot is here. He may remember that he brought me to CEPII in the 2000s when I was still at NCR. I've assumed that your interest, as Sébastien has reinforced, is both commercial and strategic. And so, in a somewhat roundabout way, what I am going to be discussing is indeed what Sébastien said, India's political and economic resilience in the face of profound domestic and global uncertainty, which will in turn shape its global engagement, including with France and the EU. Okay, I don't want this to be, let me just see if, so just on motivation again, and this was relevant to what Sébastien had to say. This is a chart which expresses the relative standing of India, not at PPP prices, but in current $1 trillion. And you can see that, this is 2019, and we don't know what the numbers for 2021 are going to say. But India has been moving up there, and it is even at market terms about the size of the economy of the UK or Germany, somewhat less than Japan. Of course, in PPP terms, it's number 3, just after China. And the main messages that I will be stressing are, first, that COVID, and I say COVID measures because it's not only the pandemic, it's also the way in which governments around the world, in Europe, in the United States, have or have not responded. Sébastien has mentioned the severity of the Indian lockdown, but they hit an already weak economy. And while the recent data on economic activity, and as he had said, on the pandemic are encouraging, or who knows what encouraging means with new strains of the virus abroad, because of the depth of the economic downturn, which is amongst the greatest in amongst the emerging markets, the so-called scarring from the pandemic, which are particularly in the labor market, which I think Christophe is going to be talking to, small enterprises, and certainly the financial system will persist. The government's response has been conservative, but we are coming up to the February the 1st budget, and this may change the government stance. What is, of course, important, and this is where growth rates are a little confusing, is that it's loss of output, which is the issue, not just growth. And there's a need first to recover lost ground, and then, if possible, to return to a high growth path. And so, to use the language of economists, one's going to be talking about, the conjunctural or cyclical issues, but then one is also going to be talking about the return to productivity growth, which is much more important. And then the pandemic and border troubles of China have intensified and, I would argue, formalized a shift towards economic nationalism and self-reliance that was already evident soon after Prime Minister Modi came into office in his second term, as Sébastien has said, in May 2019. And an early marker of this in hindsight was Prime Minister Modi's own decision to not continue in the discussions on the Regional Comprehensive Economic Partnership Agreement, which India had done so much to initiate almost a dozen years ago. And a conclusion that that I come to against this background, and I'd be interested in the views of the audience and also of Christophe, is that the engagement with Europe, for a variety of reasons, is likely to intensify. So this is the narrative that I'm going to expand on in the 25 minutes remaining. Okay, now we come to the pandemic, and there are so many measures of performance. I've taken this from a relatively neutral source, which is JP Morgan's India operation, which in turn has taken these data from our World in Data, which in its turn takes the data from Johns Hopkins. And look, there's nothing certain other than the population in this stuff. It all depends on how the stuff is reported, how it's recorded. India's system of death recording is much less well established than in advanced countries. And what does this tell us? It tells us that if you accept COVID-19 deaths per million as a metric of performance or of outcome, let's not even talk a performance of outcome, and if you accept the numbers, then the Indian record is acceptable, except by the standards of EM Asia. And I would imagine that each one of these is weighted by population, and so EM Asia reflects inter alia the very strong performance of China. So, you know, we will have a discussion because Christophe has some views on how the pandemic was managed, particularly in the early days. But by this outcome measure, you know, I would say it's a toss-up whether the glass is half full or half empty. Can I just take a pause, Sébastien? Could you tell me whether I'm speaking too fast for your audience, or can I keep going?
I think,
okay, fine.
Except if somebody has a reservation, I think that's perfect. Thanks a lot.
Yeah, okay, fine. Thanks. Okay. Now, here we talk about, you know, something which remains a puzzle, but which is important for the story going forward. I take this from a very interesting recent paper that I can send the reference to. It's in the public domain by Arvind Subramaniam, who was, until 3 years ago, our chief economic advisor, and a very creative one, with a good, who's a co-author with a good friend of mine, Josh Feldman, who used to be with the IMF. And this is based on the October 2020 WEO estimates by the fund of the impact on GDP growth, largely negative, except for China and, of all places, I think Egypt, which I don't understand why. The anticipate negative impact on growth for the year. And you can see that the impact, the expected impact on India at that time was amongst the worst in the world, and is of Latin American standards rather than Asian standards. And I don't know whether it's polite or helpful, but I do personally, as somebody who worked at the World Bank on Latin America here for a dozen years, tend to think of India a little bit as a bit of Latin America in Asia, rather than being, as it were, as well behaved as ASEAN or the NIEs or whatever. So I think there's both an analytic question on why the expected growth decline is quite so heavy, and also what that means for what we're really concerned about, which is the future. Now, this is, I understand there are several participants in the audience from the OECD, and the OECD's Economic Outlook of December, again, presents their estimates of the decline in both growth and also, more importantly, in investment and consumption, and also some worrying trends on the inflation side. And you can see that from the title to the chart, that they believe that the return to sustained growth will take time. Let me just say, although I won't be spending too much time on it, that the more recent numbers coming out of India are somewhat more optimistic than both the fund and the OECD, but only somewhat. So our National Statistical Office has come out with an expectation for our fiscal year, which is until March, of negative 7.7 GDP growth, which is a combination of factors on the supply side and factors on the demand side. Other analysts believe that that may be a little bit pessimistic. The Reserve Bank is slightly more optimistic than the National Statistics Office. But we are talking about a big hit, no mistake. And that big hit is going to have an impact. And that's what we're going to be discussing. Okay. Now, there's also the question of the policy response up till now. And this is dynamic. And as I've already indicated, there is a budget coming up, but which is expected to be something of a breakthrough. But on the basis of, and this is a little dated, but I don't think that today's numbers would be too different. I think I'm right in saying that this is as far back as June, but let's remind ourselves that many of the government's measures were announced between April and June. And on the basis of those numbers, what this indicates is that the Modi government has been cautious on the fiscal front. I do think it's worth our taking up in the discussion what lies behind this caution. But up till now, the focus has been really on liquidity infusion and using the central bank's balance sheet to provide support rather than the government's balance sheet. And this does go back to the point I made in the main messages, and that I'll come back to, which is that there was not much in the way of fiscal buffers when the pandemic hit. Sorry, this seems to have got out of sequence, but my next section is on the pandemic. Okay, sorry, no. So we now go to that's pretty much what I wanted to say on the pandemic, that it is, you know, and Christophe will be saying more, that there were sins of omission, sins of commission. The most hideous and visible example of the sins of omission was the impact of the lockdown on migrant urban labor, who are left in a truly desperate kind of state. I think the question of what kind of political consequences has is something we can take up in the discussion. So now we come to the two main sections of the presentation, which are the political and economic outlook in a period of uncertainty, and then what that implies for India's global engagement. So just to put it on the table, I'll rattle through a series of issues that I think are of interest. I can't possibly go through all of them, but I think they help to frame how all of us should be thinking about India's prospects at this moment, sort of slowly emerging from a really black 2020. What do I mean by comparators? I mean, India would like to be considered, because of the size of its population, a major global economy, and it is. We've talked about that. It likes to compare itself with China, but I won't go through the numbers here, but you can go to our world in data, or you can go to the World Bank World Development Indicators to be reminded that in terms of per capita income, India's comparators are Nigeria, Vietnam, Bolivia, countries of those kinds. And so when we talk about human development indicators, when you talk about government capacity, I do think we want to remind ourselves constantly about this dualism of India, with an important but still minor leading edge technologically, if you like, culturally, etc., but a giant tail. And so this is relevant as we think about the political response to the pandemic by the Modi government. I've used the French phrase "les fonds glorieuses," because this then described the golden age of the French recovery. Most Indians would hope that les fonds glorieux for India lie ahead. But let me just indicate that India has been amongst the faster growing countries in the world for almost 25 years now. And we know from the work of Larry Summers and Lan Pritchett that good times don't last forever. The tendency is a regression towards the mean. And so while the aspiration in India is very much that we still have our 8, 9, 10% growth ahead of us, I think it's an issue for discussion, both whether that's possible in today's world, why it's not possible, and what new constraints, including energy and climate change, might make that more difficult. I will go through these various indicators, looking at the past, and Christophe will be talking about these. But I think that when we measure, or when we think about the outlook, we've already talked about growth, but equally important are poverty, inequality, and human development. And I would say what the pandemic has certainly revealed is major shortcomings in the provision of essential human services, particularly health services. Poverty and inequality I'll take up once Christophe has spoken, but let me just say India's record on poverty had been pretty good, but on inequality, and indeed even to some extent poverty, we are handicapped by the fact that the Modi government has not, in fact, released some of the more recent data that would allow us to judge what has actually been happening on poverty. Shocks and resilience. Certainly, when you look at the objective situation of the depth of the shock and, as I say, the weakness of the economy entering it, you would think there's little hope for India. But then, as Sébastien has also said, we are in the midst of all this finding not only the stock market booming, which is booming everywhere because of the massive gush of liquidity from global central banks, but actually corporate profits rising, a return, the mobility indicators. So I think, as we extrapolate to the future, the issue of what constitutes resilience in the Indian economy is something that's worth thinking about. I have some views on that, but that's opinion, it's not evidence-based. What I call running saws, which is to say that we've had, 5 years of a government led by the BJP in the late 1990s, 10 years of a government led by the Congress Party from 2004 to 2014, 6 years of a government led again by the BJP. And the issue of good jobs, the quality of jobs in our labor market, which was one of the reasons for the tragic situation with urban migrants, this has not fundamentally changed. And I think what, the issue that arises for discussion is, can India achieve what it would like to achieve, its continuation of the fonds glorieux, without a fundamental change in the nature of its labor market? And the second running saw, which I think is in India seen as being the flip side of the democracy, is corruption, which has been a big issue for Prime Minister Modi. It's been a big issue that he's brought even to the G20. But if you were to ask, the man on the street whether much progress has been made, I think you'll get a wide variety of answers. The next bullet point that may need some explanation, polarization and consensus. What do I mean by that? the Indian political debate and economic debate, certainly, I would say, in the 6 years since Prime Minister Modi has taken power, has been extremely polarized, and it's not unlike what we've seen in the United States in the 4-year administration that ends today. And yet, underneath all this, there has been, a deep consensus not to do anything really radical that would upset the political apple cart. Okay, and I want to say this because there is very much a desire to by the opposition and by the present government to characterize the present government as a dramatic change. I regret that the reality is other, and therefore another issue as we think about the outlook is, well, with its back to the wall now, as it seems to be, will the February 1 budget be the equivalent of the famous July 1999 or July 2001 budget presented by Dr. Manmohan Singh? I would argue that the pressures at one level are fewer, because I think, as with other Asian economies, the Indian government has realized that returning to the IMF would be a political kiss of death. And so we have built up foreign exchange reserves. We are altogether a much stronger and more robust economy. So the drivers of what the government does would be on the basis of what it considers to be, as it were, the political speed limits rather than economic desperation. And finally, what do I mean by dogs that didn't bark? Which is that, this has been a period of extreme social stress in India with the impact on livelihoods. But there's been relatively little, as it were, political violence. I walk around Delhi still reasonably secure, even though there must be people with desperation over here. We have our banlieue as well. Prime Minister Modi's popularity is, by many accounts, I don't know how reliable this is, still relatively high. And I would like to link this up to the issue of tensile strength and resilience. Okay, I think I only have 5 minutes left, and I've got about half the slides. So let me now, this was really not to, these are all the issues on which I am conflicted, but I think these are the issues that matter for a discussion on India. Okay, now I will just talk about, as it were, the background. And the reason I do this is because the past is a poor guide, but it's the only guide that we have to what might happen in the future. And this just is a chart giving you inflation and growth. And what this indicates to you is that essentially the economy has been in a giant disinflationary squeeze well before Modi, and that while there was something of a recovery from the global financial crisis in 2012, the disinflation and other reasons, but in particularly the tightness of monetary policy leading to disinflation, had led to a sharp decline in cyclical growth. Now, whether it was cyclical or structural, we'll come to in a minute. I talked about India being Latin America in Asia, and I would say, and this has been relevant particularly with the pandemic, is that it is more like Latin America used to be than it is right now, in that it has had a chronic fiscal issue, problem of fiscal deficits, even when the economy was strong. And so there's a lot of debate in India about the economic consequences of this. We'll come to debt in a minute. But I do want to make the point that in contrast to our countries to the east of us, we don't have adequate fiscal buffers. Now, this is again from the Feldman Subramaniam book and paper, and they talk. This shows fairly graphically again how the macro stance was designed to purge the excesses that the new government, which is the BJP, and indeed before it the UPA2 resorted to as inflation got out of hand. And basically a lot of the problems or the issues, the macro issues facing the Indian economy as they enter the pandemic really can be traced back to an unsatisfactory response to the global financial crisis of 2009. We can come down to this, but you can see that one of the indicators where there has been progress is in public debt to GDP, which are the red bars. Now, this shows you another of the running sores, or one of the Achilles heels, which has been the banking system. And you can see that there has been a sharp increase in the NPA ratio in 2014-15. Sorry, I beg your pardon. This starts in 2014-15. This also makes the point that the problem of non-performing assets has really been in the publicly owned public sector banks. The relevance of 2014-15 and 15-16 is that this is when Raghuram Rajan, as the central bank governor, put in place more realistic asset quality standards, and that started to show, as it were, what the true state of the banking system is, and that has had an impact on credit growth.
Can I ask just a clarification on the banking sector? What could you clarify a bit the relative weight of these different subsectors, public, private banks, and foreign ones?
I should have done that. So India's banking sector as a whole is, I'm from memory now, much smaller as a share of the economy than in China. China, I believe, it's something like 200% of GDP. In India, it's about 60% of GDP. Of this, about 70% of, I think, its credit is the public sector banks.
Okay.
And the foreign banks by now are insignificant. The private sector banks have been steadily taking market share, but the public sector banks are very much used to do the government's business, and so a lot of, as it were, the deterioration in asset quality is because, opinions differ. The BJP will say that this was crony capitalism at work. The public sector banks was that they were lending to the infrastructure sector where nobody else would, and a lot of those projects have gone bad. But the public sector banks are important and continue to be important. They were nationalized by Indira Gandhi in 1969 and again, I believe, in 1980. Okay, if people want to, this is essentially a small graphic, indicating how small regular wage employment is and remains relatively small as compared to the informal sector, which consists of the self-employed and casual labor. I believe this is non-agricultural labor only, but I may be wrong on that. Okay, so I think I'm at the half an hour mark. I just wanted to say a lot of this is about cyclical, but I did say earlier that what would be important for India's future growth is potential growth, productivity growth. And this is just a graphic that I can't spend time on, which indicated that, over the long haul, which is to say in the fast growth years, there was something important and real happening in India with respect to total factor productivity, as I think this talks about, and not just labor productivity. Some of you may know the work of Ricardo Hausmann on the complexity index. And again, when you look at India's ranking on the complexity index, it is surprisingly high. So it is not the case that this is, as it were, a clapped out rentier economy. Real things have been happening, but the macro has been holding its back. And I just want to offer this to say that it is not completely nonsensical to hope that, India, under the right circumstances, will bounce back. Okay. Now, just what does all this mean for what was advertised, India's global engagement? I think I'm right. I'm beyond 25 minutes, Sébastien?
Yeah.
Okay. So last
conclude in a few minutes. That would be fine.
Yeah. Okay. Fine.
Thanks.
So just to recap what I said on the main messages, that Modi won in 2019. The economy was already sharply slowing, and I mentioned this because of the point I made already, that the retreat from, as it were, a full-bodied embrace of globalization and global integration had begun even before the pandemic. But then this year, 2020 and last year, he was hit by the policy response to COVID, the lockdown that is, then bloodshed on the border with China for the first time after 4 decades. And these have led Modi to articulate a doctrine of self-reliance to balance the earlier commitment to market-driven outcomes. Now, a lot of confusion about this. We can talk about it. Many of us do worry that, we've seen this movie before, and it's not a thriller, it's a horror movie. But they keep telling us, no, that's not the point. My good friend Arvind Virmani basically characterizes what they've been doing on the trade front is as protectionism against China, liberalization towards everybody else. We'll see. But as this plays out, it will have both domestic and cross-border consequences. This indicates to you, essentially what the structure of trade is. I should mention that, to some extent, I think the important point to make here is that the largest import partner, I believe this was 2019, was China, followed by a long margin by the United States. The EU does not rank amongst the top 5 export or import partners, but within, I find this, I think the problem is that this is countries and not the EU. So individual EU countries do not figure at the top, but amongst the erstwhile EU member states, the top 5 partners were, France was the 5th in 2019 and the 5th as an import partner. So there's lots of space to improve. Just a short point on openness. India is often thought of as a closed economy, but if you believe the World Development Indicators, actually exports, here obviously measured as value add as a share of GDP, in India are now not all that different from China. Of course, we're talking about an economy 5 times in market terms, as we saw earlier, as India. But just to say that India does need global engagement. And you can see how steady the global engagement has been until 2014, where both in, so deglobalization has been taking place both in India and in China in response to a range of things that people at CEPII know all about. Now, this talks of goods exports and imports of India as a share of world total. And I mean, you can, implicit in this is that the trade deficit has been wide, and this has been politically sensitive because a large part of the trade deficit has been with China. Now, as a if you like, liberal cosmopolitan economist, I believe that to think about bilateral trade deficits is as nonsensical for India as it is for the United States, but it is politically sensitive. That's just the reality. And that is part of what has driven Prime Minister Modi's shift towards self-reliances. A final point I think I want to make, I'll make a point on this graphic, but I'll make a point that's not characterized, that one reason that India has found it so hard to engage on trade agreements is that its offensive interests are in services trade, and something that is not normally encompassed in old style trade agreements. It has a huge interest in migration issues of all kinds. And these days, if you put that on the table, including skilled migration, people tend to run a mile. So India gets accused of, being spoilsport, but the fact of the matter is that the structure of its external engagement means that fewer people are willing to engage with it than it would like. Okay, so I think these are issues that we should take up in the discussion. I would just say that I read and others read India's retreat from RCEP, its unwillingness to engage with the Belt and Road Initiative, which is encountering its own troubles, as a sign that it is unwilling to trust China until issues on the border are solved. And as Sébastien already mentioned, the implications of this are much clearer on the security front, as represented by the Indo-Pacific, by the Quad, and what have you. But I would argue that in economic diplomacy as well, I sense a real shift to engage with the EU. There's an article in today's Indian Express by Raja Mohan, who is one of our most distinguished commentators, to that effect. I think with the Biden administration. And so even though the trade relationship with France, as we saw, is quite, is not up there, the strategic relationship with France, I think, is the strongest in Europe, and there's a lot to build on. And then finally, India and the G20, I think it's worth noting that India is in the G20, that it will be a president, it will take over the presidency of the G20, and that, some of the issues that Europe is wanting to push in the area of public goods, climate change, trade, etc., these are other areas where India and Europe can collaborate. So just to review those main messages, the COVID measures hit an already weak economy, that recent data are encouraging, but scarring will persist. Government response has been conservative, but the budget may change the stance. First, priority is to recover lost ground, then to return to a high growth path, that the pandemic has intensified and formalized shift towards economic nationalism, and that engagement with Europe is likely to intensify. I thank the chair for his license to allow me to continue, and thank you very much.
Thanks a lot, Suman. It was really an extremely insightful overview, really wide-ranging, a lot of very substantive issues. Christophe, up to you to follow up on and shed light as well on all these very complex issues India has to deal with now.
Thank you very much, Sébastien. I'll try to be as quick as I can because it's already 10 to 2 and I'll have to leave you at 2:30, and I'm sure everybody will have to do something at 2:30. I will have to rely on the support, on the help of Evgenia, because I have some problem with my slides, but I think she can share her screen now, and that way everybody will be able to follow the PowerPoint presentation that I'm going to show. Thank you very much, Evgenia. So the points I'm going to make have to do with the impact on the pandemic on the Indian society first, its political economy, and its foreign policies. So, of course, I will somewhat overlap, it will somewhat overlap with what Suman has just said to some extent. But the point I want to make is that first, what was already a problematic social issue, inequalities and mass poverty, was exacerbated by the impact of the COVID-19 pandemic. And Evgeny, if you can go to the next one, you will see, of course, that the informal sector workers were badly hit at the lockdown. And India is a very peculiar case. Very few people died of COVID. If you look at the ratio, death per population, per 1 million population, for instance, it's a very low level. But the economy was badly hit, not by the pandemic, but by the lockdown. And everything was disrupted, and millions of people went back to villages. And that was a sign, very visible sign, of the social constraints that this informal sector that Suman has just referred to continued to be. And if you look at the next slide, you can see that, in fact, in 2020, what the Economist had already revealed in 2015 came as a very obvious social issue. Inequalities kept increasing in India when there was growth. And of course, we do not have the figures, we do not have the data for the last year. Hopefully we'll get them along with the budget during the budget session in the economic survey sometimes next month. But if you go to the next slide, you can see that already by 2017, 2018, something that had never been seen before, if I'm not mistaken, you have to go back to the early 70s for seeing this amazing phenomenon. The percentage of people living below poverty line had increased for the first time in the history of India since at least 71, 72. And that's because of rural poverty. Rural poverty had increased to such an extent that rural villagers representing 63% of the population, if you go by the 2011 census, because of this mass poverty in rural India, the overall figure had also increased. So the pandemic was eating a society that was already affected by the economic slowdown and by the crisis of India's agriculture. And we may return to that in the Q&As, but clearly the mobilization of farmers today, and this mobilization is not going away, has much to do with the context of the, you can say, impoverishment of rural India that was there even before the pandemic. And I repeat, we do not have the figures, we do not have the data, but inevitably, the fact that millions of people went back to villages because of the pandemic and could not send money back home, but on the contrary, had to live in the village and be supported locally, that has inevitably increased a trend that was there before. Why can't the government help? And as Suman said, it was very conservative. Well, primarily because of this graph that showed that even before the pandemic, the growth rate had been divided by 2 in 3 years' time, but also, and that's the next slide, because of what Suman has just said, the fiscal deficit was already above 9% of the GDP if you add up everything, including the center's deficit and the state's deficit. We do not know really where we are now. Hopefully we'll know by next month when we'll have the budget presented to the parliament. There'll be a parliamentary session this time. And we will see where India stands. But of course, one of the social consequences, the social issues there, is that money for education, money for the health sector cannot be increased. And we could see during the pandemic that the public health sector of India needed more investments, but this investment could not come partly for this reason. If we move to the next slide, Evgeny, you can see that it's partly due to what the Indian Express called India's tax mess in 2020, before the pandemic. For the first time almost in the whole history of India, the revenue that was generated by tax collection was lower than ever, and that was largely due to the corporate tax cuts that had been decided just before to attract investors, to help the companies, the corporate sector, and that, of course, aggravated the situation. The government could go to the financial market to borrow money, but the next slide will show that the GDP ratio, the debt to GDP ratio of India is not so great compared to other countries. And that's what the next slide will show. And the India's sovereign ratings are now not so great either. So we have this new rating by Fitch Ratings and of course Moody's that are now negative. And an interesting comment that Fitch Ratings made in June was a stronger focus by the ruling Bharatiya Janata Party on its Hindu nationalist agenda since the government's re-election in May 2019 risks becoming a distraction for economic reform implementation and could further raise social tensions. That's an interesting comment because it's a way to somewhat understand why there are so few economic reforms in this context. If you can win elections when the economic is not going good, when the economy is not doing fine, you may not be necessarily interested in taking the risk of economic reforms. And that's what Fitch Ratings noticed. Now that's for the social dimension. But if we move on, we see economic reforms. In fact, the government of India has decided in May to make India more self-reliant, as Suman noticed. And of course, that was primarily an attempt at protecting India from Chinese investments. And that was something that was in the pipeline already before. But when the Indian Department for Promotion of Industry and Internal Trade revised its foreign investment policy, it decided that they would need now prior approval of the government for investment activities, including mergers and acquisitions from countries that share a border with India. And of course, this country can only be China. At the same time, India decided to open up and to make offers to foreign investors with this hope that the famous decoupling that the US especially were craving for would result in the reallocation of investments that had been made in China in India. This decoupling for the moment is not showing very substantial results. It seems that Taiwan, Vietnam, or even Latin American countries are attracting more investments coming from, or investors coming from China, but the hope is still there that that will sometimes and somewhat result in concrete results, benefits for India. The other reform, and that's the next slide, that is very important for the political economy of India, is the decision to privatize more. Disinvest from public units, PSUs, and even privatize. That was something already noticed in the last budget session, February 2020. But of course, the deepening of the fiscal deficit in the context of the COVID crisis has led the government to accelerate the privatization plans. And a new public sector enterprises policy has been formulated by the finance minister, who said that now there'll be a list of strategic sector, and that list, on that list, there will be no more than 4 public sector enterprises. The rest would be merged or privatized. Well, that will make some difference if it is implemented in a context that the next slides will show. In a context where you already see the top 20 companies in India representing a huge proportion of India's total earnings. The top 20 companies in India account for nearly 70% of India's total earnings, up from 14% 3 decades ago. What does it say? It says that you see now a handful of companies now cornering huge fractions of the markets. You can say they are oligopolistic in many ways. You can imagine who are these industrialists. Number 1, Mukesh Ambani, now number 2, Gautam Adani, who has risen in the most meteoric way we had ever seen since Dhirubhai Ambani, probably in the 80s. Privatizations will probably be something these companies will benefit from. Already we see the Adani Group and of course Reliance acquiring deep sea ports, airports that are privatized very quickly. So this reform, this decision to privatize more may result in a new form of, in a new kind of political economy that is already there to some extent, but we will probably see stronger oligopolistic companies which may not be terribly interested in market economy. And in fact, what we see more and more on the Indian side is that this is not a market-friendly policy, it's a business-friendly policy and political economy. Something that we could see recently when the rules of the game were changed at the expense of Amazon and Walmart, when Reliance started to invest in e-commerce. That's the second point I wanted to make. And if we can move to the next slide, we have the third one, the third reform, that is directly connected to the movement of farmers in India at the moment. In addition to self-reliance come opening to the decoupling project of process, and in addition to the privatization measures, thirdly, the government of India decided to change the regulations of the Indian agricultural sector. Agriculture has been regulated by the Agricultural Produce Marketing Committee Act, by the Essential Committees Act, and the idea was to deregulate for making trading practices easier for the agricultural markets. Contract farming should be introduced in such a way as the buyer can assure a price to the farmer at the time of sowing, but that's precisely what the farmers are very much afraid of. They are very much afraid of the same groups I've just mentioned, the Ambani Group, Reliance, the Adani Group. They are afraid of corporatization of agriculture, and they resist this in a very vigorous way, as you could see for the last few weeks. And the acme of this movement may well be the 26th of January, when they'll try to enter Delhi at the time of the Independence Day. But that's a major transformation that could indeed also result in a strengthening of the oligopolistic companies I've just mentioned above. So we have still a process that can further transform the political economy of India and result in what the opposition calls crony capitalism. The last point, and that's the next slide, has to do with the reform of the labor laws. And that can be seen as quote unquote market friendly if you consider that to liberalize the labor laws can help the economy of India to become more market oriented. I leave it there because that would take us too far, but there is definitely something to say here in relation with the first point I made. The first point I made was on the rising inequalities and the decline of, if you want, the trend that started in the late 90s, early 2000s, making the poor workers somewhat less poor, and with the making of what Narendra Modi himself called a neo-middle class, there was some hope for the aspiring categories. These transformations of the labor market may result in social tensions. And in fact, the trade union of the BJP itself, the BMS, Bharatiya Mazdoor Sangh, has opposed these decisions, which, by the way, have not been systematic. They have taken place in BJP-ruled states only. Third major part, that's of course in relation to the, you can say, interaction with the pandemic and the reform of the labor laws, just as a kind of private joke. So we can pass to the next and then reach the last point, the third part of this talk, and I will summarize it because it's 2:10 now. What I want to say here is that the pandemic will have some impact, probably indirectly, on India's foreign policy. But of course, in combination with this new development that is China's expansionism. The Chinese aggression that took place in Ladakh during the spring has made a weakened India even more vulnerable. And in reaction, India may certainly get more weapons from the usual countries, including France, but with some constraints, some financial constraints that cannot be ruled out. that cannot be neglected. These arms deals are terribly expensive, and India continues to spend billions of dollars for acquiring very sophisticated weapons. According to the Stockholm International Peace Research Institute, it had spent $60 billion in 2019 in the defense budget only. But this defense budget is already declining for years, and it's a very interesting trend. It peaked in the late 2010s, and it remains to be seen. How far will India be in a position to continue to spend as much as it needs on its defense? And even if it does, and that's my last slide, even if it does, India will certainly look for partners to resist China and to be certainly in a better position given the weakening that the economic crisis has provoked. And that is certainly a policy that will fit in the new agenda. You know, the key word these days is Indo-Pacific. It's Indo-Pacific for the US, it's Indo-Pacific for Japan, Australia, France, even Germany has now issued a paper on the Indo-Pacific in September last. There is a new concept that is crystallizing. And of course, it's in reaction to China. The subtext of Indo-Pacific, at least for the Americans under Donald Trump, was China containment. India will certainly be tempted to somewhat distanciate itself from the old non-alignment strategy and close ranks with the Quad countries, US, Australia, Japan, in order to have a coalition that would be in a position to resist the expansion of China in the new context that I've just highlighted. But European countries are not lagging behind, and there is some room for them in this equation, except that France, Germany, if not UK, have a definition of the Indo-Pacific that is slightly different from the American definition and prefer not to take side. They are there and can help India, but what would happen if the tension between China and India exacerbated? Would France and Germany, for instance, take side? And that's one of the questions the Indians have at the back of their mind. For the moment, tensions are not so acute, so this question does not arise, but that is, I would say, the next step. I would not go into that. I would just say, and I will conclude on this, that India will certainly change somewhat its foreign policy and maybe make allies, not only partners, for a change, if the fear of China continues to grow and if the economy makes it so vulnerable. So my last slide does not need to be really elaborated upon, because it's really a way to wrap up, and I leave it here for some time, to save some time for the Q&As. Thank you.
Thanks a lot, Christophe, for this excellent and really insightful presentation. And I remind to all of you that you can use the chat if you want to ask specific questions. We have 15 minutes left for to discuss your analysis, and I think we should at least have a set of exchanges around macroeconomic issues and another about foreign involvement. So perhaps to begin with macroeconomic issues, and I'm addressing both of you perhaps so that you can comment briefly on these questions. Well, you have emphasized the brutality of the impact for the Indian economy, and when you were emphasizing, Suman, that it's among the worst performances at the world level in terms of GDP growth this year, probably if we take the difference between this year GDP growth and past year GDP growth, is probably even worse in comparison to other countries. So you also emphasize some of the weaknesses of the macroeconomic situation even before the crisis, and the limited margins of maneuver of the government in that respect. So there are very high expectations, as you emphasized, and in terms of government intervention, but limited fiscal buffer. So, and here I'm echoing Wei Yao's question. What do you think, what to expect more specifically about the forthcoming budget? And what to expect exactly? How should we, what should we expect? How should we analyze what will be announced? In relation to that, I have another question, which is about the destruction of production capacity. The question in all countries now with this crisis is, to what extent is the country suffering some distraction in productive capacity because firms are closing down and so on. In this context of India, of very serious impacts of limited protective capacity of the government, how do you assess this impact? Do you think it could be a serious drag on the potential output growth in the coming years? And finally, perhaps if you have the possibility to comment on what you see as the prospects for the high-tech sector in India, in this context where the crisis is, well, some high-tech firms are doing well in the crisis, of course, but as well in this context where there is significant reshuffling of global value chains in relation to the tariff war, in relation to a number of changes in the world economy. So is there a chance India can seize the opportunities? I'm sorry, these are several questions. We have very limited time, but feel free to pick up the ones you think are more relevant. Suman, do you want to begin?
Unmute myself. I'll be quick on this. My request, Sébastien, is also, if since I know Christophe has to leave, I had a couple of reactions to what he had to say. If you can give time to that, but I'll answer your questions and allow Christophe to answer
and feel free to be short on my questions.
Yeah. No. I mean, the participants have been waiting patiently. So, I mean, I think Vijay Joshi wrote a book called India's Long Journey, where he argued, and I think correctly, that really what India lacks is what China did in 1994, was a thoroughgoing fiscal reform. If I can go back a little bit, to me, the running saw, to use the term, is basically the absence of good jobs. Okay, India has simply not been able, through all the twists and turns of liberalization, etc., to generate the kind of good jobs that China was able to do by becoming the workshop of the world. And this runs through everything. It runs through, in particular, the pattern of subsidies that we have in our budget. So an ideal budget would be one which not only cleaned up the loopholes in the direct tax system, but which really cleaned up the whole range of subsidies that are there and allows the expenditure to be redirected to the kinds of areas that Christophe has been talking about. There's been a certain amount going on the revenue side, particularly the GST and the indirect taxes. There's been some reform of the direct tax code, but as Christophe pointed out, to reduce corporate taxes when you don't have the fiscal buffers is taking one hell of a risk on growth, and that gamble didn't pay off. So the government knows where it wants to get to. It wants to get to a low tax, a moderate tax regime for reasons of competitiveness, but it has to act also on the expenditure side. And this year will be particularly important because the budget will take into account the award of what we call a finance commission, the 15th Finance Commission, and that is going to look at fiscal federalism. It's going to look at how to finance defense. So there's an ideal, but all of these exemptions have, as it were, clients and lobbyists, and you know how difficult that is. On the, if you like, stranded assets, scarring SMEs, look, our problem has typically been just the opposite, which is that we don't have mechanisms for exit of zombie firms, okay? So yes, there will be zombie firms, but the question of how their assets get reshuffled is the problem that India's bankruptcy code was meant to solve, but it has also got stuck. So, you know, the problem is going to exhibit itself in the financial sector as much as I think in the real sector. And in high tech, well, look, you know, we had a good thing going in collaboration between India and China on high tech, which has come to a shuddering halt because of the problems on the border. Now, there's a very healthy ecosystem between Silicon Valley and Bangalore, etc. I think that's kind of going to continue. But if I could just, you know, use this to leap into a larger framing, which is that in some ways, India, out of desperation, is, I think, trying in many ways to imitate the China playbook, but under very, very different kind, which is, you know, to create a walled garden for technology, to create, you know, national champions, etc. But you know, trying to do that in a democratic framework is that much harder. And the question of whether it would work or not is anybody's guess. Thanks.
Thanks a lot, Suman. Christophe?
Just to elaborate somewhat on what Suman has just said about the insolvency and bankruptcy code being stuck, because that's, I think, a very important dimension. You know, when in 2016 that code was elaborated, it was indeed a solution that should have also helped vis-a-vis the NPAs, because at last some banks could have got some of their money back. The fact that it is stuck is very revealing to my mind. It's very revealing of the fact that you do not apply the same rules to everybody. And this is a result of crony capitalism. This is the way the industrialists could save their skin somewhat. And they are so close to so many politicians and vice versa, that this kind of mutual dependence makes this kind of reform almost impossible, which means that NPAs will continue. And we do not have the last figures, but we are certainly now in double digit again. The public sector banks will be in such a situation that there is a new reform in the pipeline to allow the industrialists to do banking. And then you go full circle. You create an economy that is, well, you can say offshore in some ways. That we enter a new domain, you know, we change the dimension. And I think the desinstitutionalization that it represents is very well illustrated in the books that the RBI governors and vice president of the RBI, Ojit Patel and Viral Acharya have written. If the RBI has had 3 governors in so few years, it's partly because of this desinstitutionalization of the system regulating the economy. So I really think that that's a point to emphasize. And a very quick point about the budget problem, I mean the fiscal problem, because next month we'll see how far can India go in somewhat relaunching the economy, because there is a demand problem that is very, very clear, very acute. And the fiscal deficit is such that to increase this deficit would certainly be very difficult. So would India borrow money more? Would India turn to funders? In fact, I'd like very much to hear Suman on this, because I'm not an expert, but I see these 2 solutions only. I don't see the budget, the fiscal deficit to be increased, I mean, considerably more.
Yeah.
Thank you, Christophe. Except if Suman wants to react to this specific point, perhaps we can, and tell me if this is the case, Suman, we can move in the 4 minutes we have left to frame strategy. In particular, I was eager to ask you about relationships with the EU. You mentioned, Suman, that engagement with the EU, according to you, is likely to intensify in the years to come. And in relation to that, Françoise Nicolas was asking about India's major objective in reviving talks of an FTA with the EU, talks which have been in the pipeline for, I don't remember exactly how long.
2007, I think. Yeah.
Yes, I think something like that, and failed in 2016, if I remember well, something like that.
Right.
But FTI is one point. I mean, the context is wider, so perhaps we could. I mean, I'd be very interesting to hear you about this relationship with the EU and the prospects. Suman, perhaps.
Well, I think India sort of has a Trumpian allergy to FTAs, let me put it that way. And it also, has been busy walking back on its bilateral investment treaties, partly because of investor-state dispute settlement. And this has been very much, visible recently in arbitration awards that have gone against the Indian government in the Vodafone case, in what was the other one, in Cairn Energy, etc. So I say that because both to its east, which is to say its agreements with Japan and Singapore and Korea, and implicitly to the west in breaking off the discussions with the EU, India never seemed quite to get the need to make concessions in order to close market access. And the discussions that have taken place more recently by people who were in power at that time was that it was a mistake not to close the deal then. But the question is now, what would be India's goals? I think India's goals would be not to be, for example, at a disadvantage vis-a-vis Vietnam, not to be at a disadvantage with all the other countries with whom the EU is busy signing up. I think that we lost a chance in 2008 to take the Doha round forward. And so all kinds of issues connected with market access for services that were on the table, were not kind of locked in. So I think that, the points I'm making are the following. One is India has, on the security side, always been more comfortable dealing with member states than with the EU. But on trade, it has no choice because the mandate for trade is with the EU. And second, I think that because the EU is in an aggressive mood with other emerging markets, Mercosur, Latin America, I think India is now beginning to see, purely on commercial reasons, that it can't afford to be left out. Let me stop there.
Thanks a lot, Suman. A few concluding words, Christophe, on that issue. I mean,
well, very few words indeed. Just again to follow up with what Suman has just said, India has never been very comfortable with the EU. That's one of the problems we need to really consider and to understand. Why is it so difficult for the EU to appear as a relevant interlocutor for India, except for trade? Because as Suman was saying, for trade, there is no choice. Probably because EU countries compete with each other when they have something to sell to India, number one. Number two, they have different visions of the region, and it would be very important. I'm back to my Indo-Pacific part. It will be very important for Germany and France to be on the same page on that point. They are converging, definitely. And the idea that it's not for containing China primarily, but for offering an alternative to the countries of the region is gradually becoming the doxa of the Indo-Pacific between French and Germans. But if it has to become a EU policy, the Indo-Pacific, and if India has to take this position seriously, the EU definitely will have to close ranks and be seen as a relevant interlocutor. But we are not there yet, and I think it's for the Europeans first of all to make their homework before selling their own policies to India.
Thanks a lot, Christophe. Thanks to both of you. Actually, it was really a passionate session. I found many issues would have to be discussed yet, but we are already done with, and it's already 2:30. So we'll close here with really warm thanks to both of you. Warm thanks to all of you for your attention. With the permission of the speakers, we will circulate your presentation material. We'll make sure with you that there is no problem with that. We will also circulate very interesting, very recent papers that Suman sent us, recently published about the India economy, and looking forward to further exchanges. So thanks a lot, and have a nice day. Bye-bye.
Thank you. Bye-bye.
Thank you. Bye-bye.
Bye, Christophe.
Bye-bye, Suman.
Bye-bye.